Welcome back. I've been discussing the shocking July CPI number of 7.44 with four experts. I have been speaking with Mridul Saggar, with Neeraj, Gambhir, Upasana, Bharadwaj and Sakshi, Gupta. Ladies and gentlemen, thank you very much for waiting on. Mridul, actually that question to you. Do you think the MPC will have to debate a rate hike, even if they don't go ahead with it?
Isn't it a no-brainer, Latha? I mean,
rate hike,
MPC
really?
No, but at least all options they have to consider, and the rate hike would definitely come.
What I mean is, if you were in the MPC today, like you were, 18 months back, would you seriously consider debate, not just as an option, but that it is incumbent now 7.44 and, the full year inflation may be 5.6 or 5.8. So is that even an option they will debate?
Latha, two things. One, I would say to answer this question, I don't have to wait till 24th August when the minutes will be out, but I'll have to rather wait for basically the September inflation numbers, the lead numbers, even if the consumer data has not been very accurate. I mean, one need to see where the food inflation is going. And if there is by then some further shocks on the way, then obviously this will be on the table. Not that they would actually necessarily do that. I mean, you have to sort of consider all factors. But when you are debating in MPC, you tend to debate everything which is possible and what its implications would be. So that would be a fair point to say that there will be some consideration. I'm not saying we need to sort of say now that, the rate hike is coming. By no means that's the case.
Okay, fair enough. Then let's use the limited time to check about other possibilities. Neeraj, would it not be a little difficult to digest if the ICRR continued after September 8th? After all, it is for that limited period liquidity, May 19th to July 28th. To continue that ICRR beyond September is the definitional problem, you think, that therefore they will discard that tool and go to other tools?
I would think that if there is a need to continue with something like an ICRR or an instrument to take out liquidity from the system which is required for longer than September 8th, then I would think that there is a need to use other tools than just ICRR. Remember, ICRR has been positioned as a temporary hike, right? And the way ICRR is computed is it is on incremental, deposits of the banking system. Now, the distribution of that incremental deposits in the banking system is not necessarily the same as the distribution of existing deposits in the banking system. It's uneven in that sense. So I think given the construct, I would expect that if there is a need to continue with tighter liquidity regime or some action to tighten up the liquidity further, I think it would have to be something different than ICR.
Okay. Upasana, let me come to the inflation part and the fiscal response. It is an election year. And if you continue to have this kind of pulses prices or even cereals prices, which some believe can be high even in the Rabi months, especially if the reservoir levels are not as good, then do you think that we're going to see receding of capex and more of revenue expenditure because of income transfer programs, and that will be automatically inflationary? Is that even a factor?
Latha, at this moment, I think we should not rule out anything. Because of the uncertainties which we all have been discussing at the moment, right? We don't know how things are going to pan out. But we need to keep in mind that we have seen a reasonable amount of favorable marketing margins with the OMCs because of the lower crude oil prices earlier. And at this point, I think that is one big tool that the government would have to offset the rising food prices with the lower fuel prices. We haven't seen the change in pump prices at all for quite some time. So I think that is one clear tool, which can probably not even result in fiscal slippage because, they can just ask us OMCs to take that hit.
Roll it over, yes. But more income transfers, which can hit the fisc, is something you won't rule out.
Yes, we can't rule that out as well. It will depend on the scale of the problem that we are talking about.
Okay. All right. Sakshi, what about growth? If there is a possibility of this continued, high inflation, that takes away from consumption of several items because your money is deployed elsewhere for the consumer. And if capex also were to take a bit of a backseat, is all this leading to you to a chance of growth getting trimmed?
Yeah, I mean, Latha, on the growth side so far this year, I think we've been positively surprised if you look at some of all indicators, right? So, if I factor in, high inflation, food inflation for the coming months, disruptions to rural demand because of monsoon-related, issues, and of course, what's happening globally, because, I think in the fourth quarter of this calendar year, you will start seeing credit conditions tightening further and growth coming down in economies like the US as well as Eurozone. So there are, downside risks now to the second half growth estimates that we have. I think just to, apart from all the other indicators that we look at, if you start looking at, for instance, the job market, to me, that is turning out to be a little concerning as we move forward, because if you look at the Manrega demand, for jobs, that's been going up. If you look at, the urban sector, hiring intentions now seem to be slowing down in non-IT sectors as well. So clearly the consumption story, both from, an income perspective, inflation, rural demand, seems to be, kind of flagging a risk that perhaps we are moving into a, time period where there will be a slowdown, which hasn't happened so far.
Okay, yeah, and that may perhaps be the antidote to inflation also. Mridul, last thoughts from you. What's your sense about the rate cut, therefore? Gets pushed to August or, whatever, nowhere in the horizon at the moment?
Nowhere at the horizon in moment. Into the next year, it could be possible because global growth will start slowing down from now. That slowdown has been postponed, I thought. But what we are seeing now happening in China, for instance, there too, the weather disruptions have really caused a havoc. The northeastern provinces, which account for 20% of the crop there, grain crop, has been all destroyed. So we have a tough year here. And China's slowdown is very palpable with property sector prices. Tightening is not over. Fed, the CPI inflation again has nudged up. There have been increases in inflation in Brazil, in Russia. So we don't know where the global monetary policy cycle is heading for. And we need to be cautious in this uncertainty, as Upasana has also been stressing. So we have to wait and watch and not really be in a knee-jerk reaction of cutting or raising the rates. I think with the global slowdown, the raising rates may become more difficult, but cutting also looks difficult if inflation remains unanchored, especially if you believe the target is 4%.
Oh yes, we should remember that. Well spoken as an MPC member. Neeraj, finally, what's the range for the tenure? And recently we heard from experts from the US who believe that, we have to get used to at least a 4% on the US tenure, given that guesses on yields in India.
Yeah, I think this 4% on 10-year has come after a long time in US. For the best part of the rate hiking cycle, the US yields were below 4% and somewhere close to 3.75. So that's the worrisome part, that at this late stage in the cycle, the US long bond yields are rising, and that is obviously a cause for concern. Domestically, I think we are still kind of in a very range-bound zone, as we spoke a couple of days ago. I will still expect at around 725, 730 is the peak for now, unless and until we feel that the rate hike is becoming an imminent possibility. That is not the case at this point in time. So I think market is still kind of pricing in for a fairly stable, maybe higher for longer kind of a rate regime, but no rate hike priced in as yet.
So 7.7 quarter to 7.4 thereabouts?
Yeah, 7 quarter, 735, and I think on the downside at about 715. So I think it's a very range bound market to my mind.
Fair point. And so has the rupee been. So that's the saving grace, of course, as far as the rate market, the debt market is concerned. Thank you very much, Upasana, Sakshi, Neeraj and Mridul for joining in and giving us the benefit of your opinion. Well, the point is that one should not be talking about rate hikes just yet or even generalized inflation. But nevertheless, the worry is that perfect Goldilocks scenario of falling inflation and rising growth has clearly ended. Now it's a question of inflation getting worse than expected and growth possibly a little lower than we thought. On that slightly cautious note, we wrap up on this edition of Indonomics. Thank you for watching.